Hello everybody, my name is Christian Charlo. Welcome to this market report. Today we're Thursday, March 20th, 2014. Today folks, we had markets that rebounded strongly. If we take a look at the technical situation here, this rebound on the markets was led by the financial sector. But even if today the financial sector contains numerous breakouts though, we still believe that it's important to put your stop loss. Why? Because first of all, markets are still stuck within their sideway formation. So this is the S&P 500, but also there's a risk though that we might actually just form the head of the head and shoulder technical pattern that we expect. So this is the shoulder, this is the head, which is a little bit higher than the shoulder. And if ever we have the confirmation of a head and shoulder technical pattern, well, we will break that support and actually form the second shoulder here on the S&P 500. So there's still a risk that this technical pattern might confirm itself, simply because even if today we're going up, but we're just stuck within this sideways formation. So what are the best breakouts today on the American markets? First of all, in the financial sector, it's a clear breakout. So XLF is the ETF that tracks the financial sector. I think today it's definitely a buy. In terms of one of the best breakouts, we have Colin Frost Bankers. Actually, Colin Frost Bankers, it's recommended in our analyst choice on marketgurus.tv. You can have access to Market Gurus for free for 10 days just by clicking at the link below. And as a stop loss for Colin Frost Bankers though, your stop loss should be at 74.84, so not too far away from the current actual price. We also have M&T Bank. What I like with M&T Bank is that it's breaking an important resistance there. So where could your stop loss be? Well, if ever it goes below that former resistance here, so let's say at 116.80, I'll get out on M&T Bank. So this is where a stop loss should be on M&T Bank. Wells Fargo is also breaking out, so a pretty nice breakout for Wells Fargo, right? The trend is your friend, so as long as the stock stays within this upward corridor, I think it's a hold. As a first stop loss in Wells Fargo, could have one at 46.68. If ever it goes below that former resistance here, that could be a point where you should get out of your positions on Wells Fargo if you're getting in today. UMCA Holding, same scenario too, clear breakout. So a first stop loss could be at 18.13, and if you aim more for the long term, well then the second breakout could be around, the second stop loss should be at 17.69. So okay for an entry point. First stop loss 18.15, second stop loss 16.36 approximately on UMCA Holding. We also have SVB Financial, which is clearly breaking out, has a stop loss 123.75. And on our Canadian side though, it's mostly insurance stocks that took the lead. So the financial sector is also in a bullish cycle on the Canadian side, and we have Sun Life, that is one of the best breakout of the financial sector. We also have Manulife, but it's also in a buying technical situation too. But the only thing we didn't like with Manulife is that it didn't break that former resistance. So that's the only thing we didn't like about that stock. But definitely though, with the so far with this wave of buyers that we're starting to see into that stock, if ever the momentum continues, we could have Manulife maybe going higher than 22.15. So that is definitely a stock to consider. As a stop loss, 20.68 on Manulife. And Industrial Alliance, well, you're getting in at the bottom though, because the stock rebounded after testing an important support. So your stop loss is around 42.94. So all those stocks here actually are breaking out in the financial sector. But the best so far that we found on MarketGurus.tv is Colin Frost Bankers. It's among our analyst choice. As I said, you can have access to MarketGurus.tv for free for 10 days just by clicking at the link below. But make sure today though that if you're getting in those stocks that I've shown you, make sure to put your stop loss, because markets are still neutral. And on the S&P 500, because we're neutral though, we might just confirm the head of the head and shoulder technical pattern that could be formed if ever the bullish momentum that we had today on the financial sector is fading. So this was Christian Charlo from MarketGurus.tv. See you next week for your market report.